policy de-risking to help their clients sort of approach on their commitment for the national determinants contribution to the Paris Alliance. So we have introduced what we call a climate-focused pro-service financing (CDPF) in 2024, and so far we have developed 7 billion pipeline. It is essentially a policy instruments that focus on the climate targets. And then we have done in Brazil, Indonesia, just an examples where we have again mobilized the PA and other partners. In the case of Brazil, we work with the Global Energy Alliance for People and Planet, GNP. In the case of Indonesia, we work with the German defined again finance carbon governance, develop this climate program. This is about funding. We have this what we call the ASEAN Super Program with the ASEAN Super Targets. This is a Southeast Asia region, so maybe not better than the other colleagues here in this meeting. This is a critical market for the agribusiness stakeholders. So we like to just showcase how we approach regional policy. Right? So it's not just a national level, but the ASEAN has the ASEAN regional strategies 2045, and then based on that, we have co-developed their pipeline.
Dear participants and guests, session Investing in Central Asia, Opportunities and Partnership is about to begin. Speakers of this session: Ruslan Dalenov, Deputy Chairman of ADB Management Board. His Excellency Sheikh Ibrahim bin Khalifa Al Khalifa, Chairman of the Board of Trustees at the Accounting and Auditing Organization for Islamic Financial Institutions, Bahrain. Sami Al-Suwalaim, Acting Director, General of the Islamic Development Bank Institute, Saudi Arabia. Abdullah Haram, Deputy Secretary General of the Islamic Financial Service Board, Malaysia. Ammar Ahmed, CEO of Dar Al Sharia, United Arab Emirates. Angela Cheng, Chief Macro Strategist, China Galaxy International Securities, PRC. Teze Wang, Managing Director, C6, Green Finance International. Moderator of the session, Paula Naufal, Senior Reporter at CNN Business Arabia.
Good morning, ladies and gentlemen. Central Asia is attracting growing attention today because of its geography, its resources, its role in new trade corridors, and its growing need for long-term capital investments in infrastructure, energy, logistics, and sustainable development. This is also happening at a time when investors are looking closely at Asia's growth story. Central Asia remains one of the fastest-growing regions in the world, while it is also increasingly seen as a strategic bridge between China and Europe. But opportunity alone is not enough. The real question is, how does Central Asia turn this momentum into actual investment? What do investors need to see? And what role can Islamic finance, capital markets, and sustainable finance play in unlocking this capital? To set the stage, we will begin with opening remarks and keynote interventions from our distinguished speakers. So it is first my pleasure to invite Ruslan Dalenov, Deputy Chairman of the Management Board of the EDB Bank, to deliver his opening remarks.
Thank you, dear Paula. Good morning, ladies and gentlemen. On behalf of the Eurasian Development Bank, I would like warmly welcome you all to this session and extend my special welcome to our distinguished guests and speakers, Your Excellency Sheikh Ibrahim Al Khalifa, Dr. Sami Al Suwalaim, Dr. Abdullah Harun, Angela Chen, Ammar Ahmed, and Teze Wang. People are always interested in two questions. Where does the money come from and where does the money go? So this brings us to today's topic, investing in Central Asia, opportunities and partnerships. Every region has its own development bank, a regional development bank. Africa has the African Development Bank. Latin America has its own, the Inter-American Development Bank. The Islamic world has the Islamic Development Bank. In Central Asia, there is the Eurasian Development Bank. We are the regional specialists. We are the home team in Central Asia. Central Asia consists of 5 countries: Kazakhstan, Kyrgyzstan, Uzbekistan, Tajikistan, and Turkmenistan. Geographically, on the map, nothing has changed. But economically, the region has changed dramatically. Today, Central Asia is a fast-growing region. Its combined GDP is around $566 billion. It is also a region with significant human capital, with a population of 83 million people. If you're not impressed by the absolute numbers. I can offer a comparison. For the last 2 decades, the global economy has grown up by 2.5 times. Meanwhile, Central Asia's economy has grown up by 5 times. The growth of population has also outpaced the global trend by a significant margin. At the same time, investment in manufacturing has more than doubled, reaching $113 billion, reflecting increasing industrialization. So what does Central Asia need? Where will investment go? We can answer this question from 3 angles. First, from our portfolio, what our clients are asking us to finance. Second, from our analysts, what the region will need by 2030. And from our vision of the future, what the next waves of investment may look like. So, what does our portfolio tell us? If we analyze our portfolio, we can identify new 5 key trends. First, in the past, clients were asking us to finance current existing production. Today, they mostly seek financing to develop new industries, new production facilities. Second trend, previously the focus was on green energy. Today, we see growing demand for reliable energy, for gas and traditional energy generation. It's not only about replacing aging assets, it is also about providing reliable energy for growing industries and heating for expanding cities. Third trend, transport infrastructure is becoming more sophisticated, more diverse. It is no longer just about roads and railways. It's also about ports, shippings, air cargo infrastructure that reflects the region's growing export ambitions. Fourth trend, we are seeing new areas emerging in our portfolio. These include financing in yuan, in dirhams, and Islamic finance. Together with the Islamic Development Bank Institute and the London Stock Exchange Group, we have prepared a comprehensive study about the future of Islamic finance in Central Asia, and the findings are encouraging. The Islamic banking assets are projected to reach $6.3 billion, and the Sukuk market could reach $5.6 billion by 2033. That reflects the growing economics, demographics, and demand for Sharia-compliant products. And we also see demand for financing in yuan and dirhams. That means that interesting projects linked to China and Middle East countries are emerging, and we are requesting to that request, changing, expanding our plans and activities. And fifth trend, together with international financial institutions and commercial partners, the EDB has arranged $2.9 billion in syndicated financing. These transactions have supported gas pipeline, airports, roads, and other projects worth around $7.5 billion. This shows the power of partnerships. In Central Asia, we see growing demand for larger, complex projects. This requires strong partnerships. That's why we invite international financial institutions, investment bank, commercial partners to join us Altogether, we can combine capital with EDB's expertise and cooperation with our shareholder states. Altogether, we can mobilize more significant capital to the region. So this is what our portfolio tells us. What do our analysts tell us? Their conclusion is straightforward. By 2030, Central Asia will require substantial investment. $170 billion in energy, $60 billion in transport infrastructure, $14 billion in water irrigation, water infrastructure and irrigation, and $7 billion in logistics. And these estimates are based on detailed research conducted by the bank's analytical team. These are not only financial needs, these are investment opportunities. And finally, what does the future look like? When we look beyond today's projects, we can see the next wave of investment already emerging. Energy storage, climate technologies, artificial intelligence, robotics, climate technologies, space technologies will shape the next stage of economic development. And Central Asia is no longer a simply region of natural resources. It's a region of innovation, industrialization, manufacturing, long-term investment. It's not only about growth. It is also about avoiding the middle income trap, moving up the value chain, increasing productivity, and creating new industries. And that is precisely what why today's discussion is so important. Thank you very much. I wish you all an engaging discussion and a productive session. Thank you.
Thank you so much for this informative presentation. I would like to now invite His Excellency Sheikh Ibrahim bin Khalifa Al Khalifa to deliver his keynote address.
بسم الله الرحمن الرحيم والصلاة والسلام على أشرف المرسلين. Your Excellencies, ladies and gentlemen, it is an honor to be here. And before I begin, please let me convey the warm greetings and best wishes of His Majesty King Hamad bin Isa Al Khalifa, the King of Bahrain, and His Royal Highness the Prince Salman bin Hamad, the Crown Prince and the Prime Minister of Bahrain. I also express my deepest appreciation to the Eurasian Development Bank on its marked 20th anniversary for convening this forum and for honoring OIOFI with a place in this conversation on Central Asian economic future. The question before us is not only how Central Asia can escape the middle income trap and become a high income region, but also how it can sustain that prosperity once reached. And that depends above all on how growth is financed. For finance, it is the wheel, as finance is the wheel on which every industry, as His Excellency Raslan has said, turn. Excellencies, let me begin with the hard truth. Today, 108 economies are at middle income level, and since 1990, only 34 have reached high income status. More than 1/3 of those transitions were helped either by joining the EC and get the fund from there, or from natural resources like oil and so on. So those exceptional routes aside, and the few remaining cases reveal two sharply different ways of financing growth. The difference between them is the lesson we have to look at today. The first path relied on domestic saving, surplus, and investment tied to production. Main example is Singapore and Taiwan. Followed it, and when the Asian financial crisis in 1997, they stood very firm. The second path, involving heavy extended borrowing, which Brazil, Argentina, and Mexico, and when their debt crisis broke, their progress reversed and they remain middle income till today. The lesson is clear. The interest-bearing debt may finance projects, but it cannot be the foundation of lasting prosperity. Excellencies, that lesson led to the real tests. Finance must raise productivity. Moving from middle income to high income require productive upgrading, and productive upgrading requires capital that can bear uncertainty. This is where equity has a decisive edge over the debt. Debt creates a fixed claim, often secured by collateral, whether the venture succeed or fail. Equity, by contrast, is the assets backed, and risk sharing, as it's tied to the real economy, any participate in the commercial outcome. That is why equity, not debt, is the better suited productive investment. Interestingly, these same principles, assets, backing, and risk sharing, sit at the heart of Islamic finance. But Islamic finance goes further. Though through waqf, zakah, sadaqah, and qard hasan, it added social finance and ensured that benefits of growth reach every segment of the society. This is why Islamic finance should not be treated in Central Asia as an option among many. Instead, it should be treated as a strategic priority. Excellencies, ladies and gentlemen, the future of Central Asia with Islamic finance and the future of Islamic finance in the region rests on the depth of its capital market. The reason is clear. Escaping the middle income trap requires productivity. Productivities require long-term investment, and long-term investment require deep market to raise it. The region must invest sum of around $260 billion, $60 billion in energy, transport, and water by 2030. This is a big challenge. Amounts not banking system can carry on its balance sheet. Such capital is raised in market through instruments like sukuk, that's asset backs, development-oriented, and able to draw the patent capital of the Gulf and beyond. Without that depth, Islamic finance remain useful but limited. With it, Islamic finance become a development system. That's why the Islamic finance market must be designed, not improvised. The future must be prepared before it arrives, and that requires all stakeholders to move together. I am therefore pleased to announce that IOFI, in partnership with the Eurasian Development Bank and Islamic Development Bank Institute, and supported through our Central Islamic Finance Development Office in Kazan, in the Russian Republic, is developing an Islamic finance roadmap for Central Asia and the CIS region. Now here, I would like to re-emphasize, won't be one-size-fits-all roadmap. Instead, it will be grounded in countries by countries diagnostics. So each jurisdiction move according to its own roadmap, conditions, and priorities. The objective is clear. We want to build the market depth through which Islamic finance can raise productivities and carry this region from the middle income status to the high income prosperity. At this end, I will have to end with one word. Ladies and gentlemen, your sympathy is not enough, but it is the beginning. Thank you for listening.
Thank you, Your Excellency. And now joining us online, I would like to invite Dr. Sami El-Suwailim, Acting Director General of the Islamic Development Bank Institute, for his keynote intervention.
Excellencies, distinguished guests, ladies and gentlemen, Assalamu alaikum wa rahmatullahi wa barakatuh. I am grateful for the opportunity to participate remotely in this important event. Central Asia is a region of great promise with significant potential to contribute to both regional stability and global prosperity. Ladies and gentlemen, last year, ODI Global conducted a major survey of multilateral development banks' clients, primarily government officials alongside some MDB staff. The results, announced in March of this year, drew on nearly 650 responses from 125 countries, gathering 250 in-depth interviews across 12 country case studies. The findings present a clear paradox. MDBs are viewed as more essential than ever, yet their perceived effectiveness has remained largely unchanged and in some areas have even declined despite ongoing reform efforts. This suggests that while the demand for MDB support continues to grow, our collective ability to respond effectively is not keeping pace. Member countries are pursuing ambitious agendas and their development needs are expanding rapidly. If MDBs cannot scale their financial resources at the same rate or even at a higher one, our impact could be on an alarming downward trend. A critical question, therefore, emerges. How can we not only remain relevant, but enhance our value to our member countries? I believe the answer lies in deepening our partnership with member countries. True partnership requires moving beyond a model that relies primarily on debt financing. While financing remains important, it should be guided by a stronger focus on building institutions within member countries. Nobel laureate and development economist Arthur Lewis remarked, "The fundamental cure for poverty is not money, but knowledge." This sentiment was powerfully reinforced by the 2024 Nobel Prize in Economic Sciences, which recognized pioneering research demonstrating the critical role that institutions play in shaping long-term economic prosperity. For development to be sustainable, therefore, countries must be able to lead their own transformation with greater self-reliance. This means investing in the institutions, skills, and governance framework that enable countries to design, implement, and sustain their development strategies over the long term. MDBs should therefore expand the scope of their engagement over the coming decade, while continuing to provide financing, especially performance-linked financing. We must place institutional capacity building at the center of our efforts. By helping member countries strengthen their ability to lead their development, we can ensure our support is not only more effective, but truly lasting. Thank you for your attention. Wassalamu alaikum wa rahmatullahi wa barakatuh.
Thank you, Dr. Sami. So, Angela, I want to kickstart this panel with you because you sit more on the macro side of things.
Yes.
So, if we look at the investor side, what are the main opportunities today in Central Asia, and what is making Central Asia more interesting than it was a few years back?
Thank you. Very good question. This is Angela. I came from Hong Kong, where we get access to international funds, especially those the long-term funds or long-term assets. So, because actually the China Galaxy, my company, is owned by the Ministry of Finance of China, as well as the China's sovereign funds, CIC. So, like after 100% of acquisition of CMBI in South Asia, so we expand our landscape to South Asia area, include and others even beyond that, so like Korea and the U.S. and Europe. So, why we think that the Central Asia is quite special in terms of, especially in the time of very huge like global geopolitical reshaping, or let's say the global asset reallocation process now is undergoing rapidly. So, because every day we connect different kinds of international funds and to identify Central Asia, how we position this region in this whole global asset allocation landscape. I would like to highlight some of the points I think is quite unique. The first one is the very unique continental transit position, or let's mention for several times the corridor. The meaning of that is far-reaching, right? So because not only those infrastructure, I mean the transportation infrastructure project themselves bring a lot of investment opportunities and growth potentials. At the same time, actually build the very fundamental infrastructure all for the future growth and to link the region, I mean the Middle East, as well as East Asia, including China, Japan, and Korea, and even far away to Southeast Asia, right? So the dynamic of this whole region is quite clear. So we have to grasp this investment opportunity. So that's the very first point, okay? It's a very unique position. The second one, as we can see, both traditional and renewable energy, right, as mentioned a little bit earlier. So I think energy in the time of AI techniques or applications is quite important. So it has changed from the traditional like usage into more like national level strategic foundations. So I think the energy itself, and we see the huge potential in Central Asia. A lot of financial instruments can come together in that area, no matter like traditional ones, also right, energies at the same time, renewable energies, which later maybe other panelists will share more about sustainable investment or impact investment. So that's another green area to focus on. So the third one, we see the young generation here. We feel the dynamics compared to other regions, other different regions in the world right now, especially the developed world, right? We see the younger people, the young labor force, so the kind of huge potential in the consumption market, right? So for the next 20 years at least. So for the domestic, no matter domestic or international companies or investors, we have to grasp this opportunity. So this is very clear, one of the trend. And the fourth one, we can see that different kind of financial instrument can be applied here. For example, the traditional one is applied everywhere in this world in different kind of financial institutions or financial centers. At the same time, Islamic financial instrument. So if we combine it here, I think that's the uniqueness here we can find in Central Asia. So a huge potential. Very last, we see like, I will also want to mention about the China and Central Asia's cooperation, right? So because this year marks the 20 years of EDB, and we see more like China or related regions representatives coming to this conference. Actually, it reflects a broader trend of the further, the boundings or cooperations or interactions, right? So we have some of the projects or financial cooperation going on or still under discussion. So that's the huge meaning, right? So I think this is the right start to like further enhance the region's cooperation. So I see huge potential.
So just to follow up on that, so the location was always the same and the resources were always here. So why now? Have other markets become oversaturated? Was this market undervalued? What was the trigger for this interest now?
Because nowadays, actually, stability is quite important. And also, as I mentioned, the meaning or the fundamental strategic, the meaning of the energies has been changing fundamentally. So that's some of the things compared to the past years, right? The whole global landscape, especially given the geopolitical factors we need to consider, right? So it's ever-changing. So.
So you spoke about a very interesting instrument, which is Islamic finance. But for Islamic finance to scale, investors need confidence in the standards, in the regulation, and the way deals are structured. So Your Excellency, Sheikh Ibrahim, I want to ask you, if Central Asia wants to attract more cross-border Islamic investment, how important is it to have common standards that international investors already recognize?
Thank you. I think it is very clear we are a non-profit organization. But for instance, for Hong Kong, they should, I think, look at the United Kingdom system and has been adjusted to accommodate Islamic finance in a week. The government in Luxembourg, they have adjusted with consultation with us in 2 days. And to attract the market, as His Excellency mentioned, has now reached $6 trillion. That we are looking forward, not from us, from others, that we are going to surpass 9 trillion by 2029. And the demand is not on the asset side only. It is 3 times on the liability side. 3 times that people would like. And the latest study, which we are building, taking as which has forced us to go to do the diagnostics in this area, is that the result in only one country, which is Azerbaijan, that the demand of the household, 85% for Islamic product. So this cannot be ignored. Otherwise, the rift and the inequality will get bigger and bigger. And that is the roadmap for disaster, as Mr. Swalem said.
Just to follow up on that, but how do you balance between strong Sharia standards while keeping Islamic finance practical and attractive to investors? So how do you do that balance?
That is not, the finance has been, from the beginning, is that something which has to be based on real assets. If you would like to continue on a prosperous road, using the speculative things or you separating the risk and the underlying liability from both wouldn't produce. So the Sharia standard and the accounting standard, and all of this is based into the philosophy of accounting. And that's what we are asking. Fairness, clarity, transparency, and that's the attractive which has been going. The other big thing is that the number of Muslims have surpassed now 2 billion human beings. This is not the problem. The problem is that the 2/3 of those is very young, and they are hitting the market. And who's those? The consumers. The big consumption part is that the owner of the resources. That's why you'll see that huge approach. We just came from a big meeting there for resources and development and lending. Some of the countries, even in Asia, they give ECAs 100% for a project. And that is reflecting the issue. Thank you.
Thank you, Your Excellency. So Abdullah, you sit on the more regulatory side of things. What regulations do we need to see in place in Central Asia so Islamic finance can grow?
Maybe before addressing the question, the Islamic finance in Central Asia is actually remains limited in scale, but it varies significantly in terms of the institutional development or maturity across countries. So, when it comes to the engagement itself, we notice that it's primarily related to very specific areas, and it also varies from different jurisdictions. In that case, when it comes with the the alignment of the international standards, actually the countries actually remain partial and uneven, and it's limited in scale in terms of the sector that they are covering on. And when it comes to the prudential characteristics, most of these countries actually concentrated exclusively on the asset-based contract, such as the murabaha, and to a lesser extent on ijara. So that is where we are looking at. Profit sharing are absent in most of the jurisdiction when we did the analysis. And capital markets remain embryonic in some of the jurisdiction. And for that, when it comes to the standard development, so this is where, from our assessment from country to country, when we did the diagnostic assessment for each country, which we have done 3 countries already, based on this development objectives of different countries, the standard development actually varies. In fact, some of our recommendation, they should not push too fast when the market is not there. But the most important thing is basically on the building the capacity among the supervisors, as well as the market players itself. Because of some of these, the concept itself remain aliens in some of these jurisdictions. Probably I'll stop there first.
Thank you. Ammar, I want to go to you. So you said more on the deal side of things. What would make Islamic project finance easier to execute here in Central Asia?
Thank you very much. First of all, before I answer the question, I would like to take this opportunity to congratulate EDB, the member countries, for their 20th anniversary. And I think it's a landmark moment for them. Secondly, for Islamic finance, I think EDB has assembled here, if you notice, stalwarts of the industry, the IDB, the IFSB, and the IOFI, which are, you can say, the cornerstones which has led this industry to where it stands now. And thirdly, I'm also proud to be here from the United Arab Emirates, because for those of you who don't know, the first Islamic bank ever licensed in the world was licensed commercially by the Central Bank of the United Arab Emirates. So Dubai Islamic Bank, which is our parent organization, was the first Islamic bank which sort of sowed the seed to what we now see as a $4.4 trillion industry. And that was back in 1975, and it's 50 years now. So with this background, I think coming to the point, the question that was asked. So if you see a lot of synergy between Sharia compliant financing, Islamic financing, or as some countries would call it, participation financing, or non-interest based financing, and projects. Why is that so? Because you see, Sharia compliant financing is, as His Excellency, the chairman of IOFI mentioned here, is based on outcome, impact, partnerships, equity. So there is a lot of synergy in terms of how Islamic banking and finance aligns with the project financing principles. So the structures that are available to do project finance in terms of long-term project finance, in terms of any project finance needs, the activity itself aligns with the core principles of Sharia compliant banking and finance. So I think with the institutional support that we have now, with the focus that we have now, with the MDBs like EDB putting in effort to sort of break the path, and lay the way for the institutions here, for the governments here, for the member countries here, and overall, I think it will go a long way when we look at the Islamic finance structures helping project finance.
So you spoke about the importance of synergies, but what are some of the main challenges that lie ahead here in Central Asia when it comes to these Islamic project financing deals?
If you'd asked this question to me 3-4 years back, the list of challenges would have been longer. But now, alhamdulillah, I think we all know very well that considerable effort has been put in by the regulators, the authorities, the governments. So if you look at the landscape now, apart from a few countries in the Central Asia, which are also in the process. So you have Kazakhstan, which has paved the way by making regulations and laws. You have Uzbekistan, you have Kyrgyzstan, you have, Tajikistan is on the way. So almost all the countries in this region have rose to the occasion. And now there is no excuse for anyone to say that there is no level playing field for Islamic banking and finance. Yes, there are some areas which is, for example, having human capital, to understand the structures, to help implement them. Secondly, developing the ecosystem, because you see, for any industry to grow and prosper, you have various pillars of the ecosystem. So how this ecosystem comes together as banks, as general population, as governments, as regulators, to create that capacity within that ecosystem so that Islamic finance and the contracts and can prosper.
Thank you. Teza, I want to go over to you. So we know this region has a lot of resources, whether it's traditional energy, oil and gas, or renewable or sustainable energy. And we know nowadays that oil and gas is still very important, whether it be in Central Asia or the rest of the world, especially with the AI boom and what geopolitical events are shaping the globe right now. But talking about sustainable investments here in Central Asia, what do we need?
Okay, thank you for having me. I'm the representative of CCX, 忠诚信. So basically, we're a credit rating agency headquartered in Beijing and with regional office in Hong Kong and Singapore. So before I echo your question, we have really been a long-time partner with EDB, providing the credit rating for the panda bond issuance, and also potentially in the dim sum bond market. So we're really appreciate and as a valuable partner to grow with EDB in the past decades. So to echo your question, I think to strengthen the sustainable investment in the region, particularly in the Central Asia area, from our experience in China, we do have some several key points for your reference. I think in the past decade, China does do great job in the sustainable development. I will give you several big number. Up to now, the current green bond issuance has passed over 3 trillion RMB, which is around 440 billion US dollar. And for the green loan, China has issued more than 30 trillion RMB, which is around 4 trillion US dollar. And all of the user proceed for such a instrument has been put into the electric vehicle, a solar panel, wind turbine, hydropower, and storage, energy storage, and battery industry. And China does build a very robust and resilient industry for all this kind of clean energy and a clean transportation sector. So, so when you talk about once we have a really key part for the sustainable investment, we really need to put all this industrial sector for clean trend, for green trend. So I think that's the key summary. Another point is, in order to increase the credibility of the investment for the sustainability industry, I think transparency and the disclosure is very important. From our perspective, for whether for Hong Kong Stock Exchange or Chinese stock market, regulator all require the major list companies has to disclose their whether ESG report or ESG rating. And I think those kind of the disclosure also increase the credibility of those sustainable investment. And also another scale of the investment also include for green bond or green instrument financing showcase in the capital market. All of these measures, I think, from our perspective, will strengthen the credibility and confidence for the investor to increase the investment for the region.
I want to play the devil's advocate just a bit, if you don't mind. So they always say that the West already benefited from the oil and gas boom, and other developing nations or countries that have abundant resources are still in that process. So going back to my earlier point, oil and gas are still important, especially with today's boom. How do you balance between the two, between these sustainable energy projects, but at the same time, the need to benefit from the traditional oil and gas? And would one affect the other? Would investments in oil and gas affect sustainable energy investments?
In terms of the like the green finance, the world, I think whether we have regarding the project we have done in China or ASEAN country in Southeast Asia, I think there are three key points that really drive this market growth. The first one is we have to see that it is a policy-driven market. Regulator really play vital role in this market. For Chinese perspective, all Chinese regulator initiate ambitious agenda to promote such sustainable development, whether for green finance or like electric vehicle or solar power. You can all see have very detailed plan for such sector. And the second part is for this industry or green finance world, where we really need to follow the best market practice, which need to follow the international recognized standard and principles. For green bond, we have green bond principle published by International Capital Market Association, and for the green loan, we have the APLMA, Asia Pacific Loan Market Association, for the green loan principle and other sustainability instrument. And also, China also take initiative for the common ground taxonomy with Europe counterpart, which also strengthen the cross-border standard to recognize which is green asset for the capital market to recognize. So that's the second part for the principle and the taxonomy level. And I think for the third part, we see from the real finance world is that there are also some subsidy driven market, like in Hong Kong and the Singapore market. The financial regulator actually provides a huge subsidy for the green finance issuer and the borrower to cover such external review cost for the whole deal transaction. And also, some Chinese banks also have some KPI to invest in such green assets, which also provide a really robust signal to grow this market.
Angela, I want to bounce this question off to you. Are you seeing investor appetite for both traditional energy and renewable energy, especially when we talk about Central Asia?
In terms of global investors' interest in the renewable energy and the related subsectors, right? So we see, actually during the past several years, we see clear trend that investment in this whole area of renewable energies has been rising until recently due to geopolitical events. We all know, right, what been happening since the early of this year. So fossil energies, there, as I mentioned earlier in the first round, its strategic position has been fundamentally changed. So what we are seeing right now in this world is that on one hand, the renewable energy or related investment is still going on with rapid growth. At the same time, the traditional or fossil energies has been drawing more attention compared to the past several years. So in terms of our asset allocation whole landscape, both for our firm as well as our partners, as mentioned, many of them are global funds or like sovereign funds or multinational investors. Actually, they're looking at those. I think that the positions are quite different for them.
Has this changed over the years? Do you think like traditional energy sector the demand is growing than it was a few years back, given the boom that's happening in artificial intelligence and the geopolitical events, or is it still the same? What are you seeing from the global investors side of things?
I think the whole transition progress is still going on if we're looking ahead to the next several years. But I think the traditional energy, its importance should not be undervalued for at least, let's say, a decade, right? Even given that AI-driven, all this kind of industry transformation is going on really quickly. But I think especially given that we're talking about Central Asia, all its cooperations with China and beyond, we believe that renewable energy, or for example, mentioned about EV or other like solar or wind energies, at the same time, consider about the fossil, the oils or coals or traditional energies. Put them into different characteristics and they have different positions in the investment portfolio.
Thank you. Abdallah, I want to go to you. So for Central Asia, if we look at it closely, is it better to build a full Islamic finance ecosystem from the beginning or to start with one or two products and regulate gradually?
Okay. So when it comes to Central Asia, I think first and foremost, the priority would be the capacity building, as I reiterated earlier. And secondly, we have to look at, like in what particular area they want to start, because some jurisdiction, they want to start issuing sukuk. So in that case, I think, the legal framework related to the sukuk need to come first. Some jurisdiction, they like to start from the retail, Islamic banking perspective. So that is where the regulatory framework become prominent. So across the, across the Central Asia, it is uneven, as I mentioned earlier. And the fact that, Islamic finance has been used selectively in the development of the financial ecosystem in the jurisdiction. So that is where I think the application should complement what the existing development is. One other areas that I need to emphasize that we should not, from my perspective, my observation, is like Islamic finance should not be, like run separately compared to the conventional. It should be blended in the existing, development of the financial sector itself. Because, for example, when you do the financing, maybe the blended finance between, including the conventional and Islamic finance, or Islamic bond and the conventional bond, they can be issued together. First, I think the authorities learn from that experience, the intricacy of understanding between the Islamic finance and conventional. So that is where I think when it comes to the developing the ecosystem, it depends on the priority of each country itself.
Your Excellency, Sheikh Ibrahim, you want to follow up?
I just want to go back to the energy sector. I don't want to drift too far from the present reality. Last week or the week before, Mr. Yahya was there. We are constantly meeting with Rostom. And the drive is on nuclear because the energy is a security. And there is 3 reactors now built in our area, one in Uzbekistan, one in Kazakhstan, and there is something which is very much demanding now, which is the nuclear medical, which is the first one now, is put in Uzbekistan, and it will go on. Now, why I'm saying this, the capital expansion or expenditure on nuclear at the beginning is high, but on net present value, it is very cheap. And it is environmentally, we just checked that last week in the nuclear agency in Vienna, and they vetted that this is zero emission, and it is lasting between 60 and 80 years. It gives security versus wind and solar or conventional. And the area here is going into that route because of the massive requirement. The other problem is these countries is so huge, and the population is not as we have discussed that. So this is one of the main concern. Now, does this leave the other wind and or solar? No, that will be a combination into that for the future. Now, always remember what Swalem says, poverty is not money, it is knowledge. There is no knowledge, no development of AI or anything without cheap electricity. Now, saying all of that, the market in the whole world of nuclear, 90+% is controlled by Russia. They have the most advanced technology, and we have seen, and we are in active discussion with them to finance some of these. Now, I have to tell you that this is something is known, I don't know whether it's known. Next month, the biggest reactor and first one will be commissioned in Bangladesh, will start producing power. This will be giving electricity for 36 million people. And just from that, you can draw conclusion.
So just to follow up on that, you're absolutely correct. Like this diversification, we're seeing it a lot in nuclear energy. France is going big on it. Also, the UAE is going big on it. And to my knowledge, Kazakhstan has a lot of uranium that they can benefit from. But I also want to ask you, when we're talking about demand for Islamic finance, we're seeing growing interest, and you spoke about this in your first round of answers, from non-Muslim countries. And you mentioned the UK, for example. Why are they interested? Because it's straightforward, because there's more profitability, because they want to diversify their financial instrument. What's the reason for non-Muslim countries?
Very simple answer. The interbank for Islamic funds in the UK has surpassed 600 billion pounds. And that explains it. That's why most of the universities, whether in France or Germany or the others, they are actively collaborating with us in order to align themselves with that, because the future market is this. We are, of course, working heavily now with the institutes and in China to do that. But of course, Japan is very much ahead. And Korea, of course, following. University of Tokyo is very much active into that, and they think that this is the future. And in Japan, it is a real story there because of the industry. Japan have no natural resources. On the other side, it is the second or third largest economy.
Thank you. Ammar, so you are based in the UAE. There's a lot of investments in Kazakhstan and in Central Asia, whether it be from Masdar, DP World, Abu Dhabi ports. So a lot is happening. Where do you see the relationship between the GCC and Central Asian countries, especially when we talk about Islamic finance?
So, I mean, if you're looking at let's say now we have a lot of, mobility in capital across borders. So the way we advise is when a potential project or a potential, let's say, obligor or issuer is looking at inviting capital from jurisdictions where you have Sharia compliant financial ecosystem, which is systemic in nature, like GCC. So what we say in GCC now is the Islamic banking, Sharia compliant banking is a systemic industry. In some countries, it is 50% or more. In some, it's 30 or more. it's part of the system. So if an issuer or an obligor or a multilateral bank or any seeker of capital would like to have adequate demand for its project, and they are bringing that project to GCC, for example, the advice would be, why don't you bring that project in a form and format which is Sharia compliant? By this, they would be not just restricting themselves to potential, 50 or 60% of the investor base, or whoever you are looking to seek that capital from. Rather, your project would be open for everyone. So therefore, if you see now, the trend is you've seen North American issuers coming to the region with Sharia compliant instruments. You've seen recently sovereigns, even like government of Philippines and others coming to the region, tapping the liquidity there. So for that, I think the key takeaway here is, are the obligors or the issuers in this region, whatever form and format they would be, sovereign or otherwise, are they willing and do they have the ability to structure their transactions, projects in a Sharia compliant manner? In summary, the answer is yes. We have seen some examples recently, and I think it will grow once we have more and more participation, active participation, which can invite the capital from that region.
Are we seeing also interest for labeled sukuks, specifically sukuks when it comes to environmental, social, green, so merging between different sectors?
Yes, because you see, this is driven by two. One is driven by the regulatory push in some countries to align with the COP, requirements to have sustainable finance portfolio. If you're looking at banks, you have goals and agendas. So yes, if you're having a Sharia compliant and sustainable, ESG-based project, yes, the demand would be there for such projects.
Thank you. Cesar, I want to ask you, so what comes first for green financing? Is it standards and taxonomy or a pipeline of bankable green projects? So if you had to pick one, which comes first?
So you are saying, you are asking about like what is a priority for the market to address from issuer perspective or from investor perspective?
Investor's perspective.
Investor perspective. So from investor perspective, I would say the greenwashing risk is to avoid the greenwashing risk is a priority for investor to pay attention to. So I would say high standard or taxonomy principle is a high level to select such eligible project for the qualified issuer to issue such a green instrument. So I would say taxonomy and standard.
Angela, if we want to look at this region and you had to choose one financial instrument, and if you want to cheat, you can choose two, which one would you choose? Would you go for green bonds, Islamic financing, currency bonds? Where would you start?
Only one choice?
One, and you can cheat and give a second one.
I would like to say, put in this way, that my answer, if we put in one phrase, that will be traditional plus creative or Islamic. So let me put it this way. For example, why I mentioned about traditional ones, for example, multi-currency bond insurance, not only in local market or local currency, but in other major currencies. For example, let's put it this way. The RMB dominant bond has its own advantage, especially when the project is linked to the Chinese counterparties or Chinese market, to hedge the currency risks there, right? FX risk. So that's one of the advantages. Let me set an example. And thinking about the global yield differences recently, right? In China, the policy rate is quite low, around 1.5, around that range, average range, really, really low, really cheap financing cost. At the same time, if we look at US, for example, people are watching about Fed's decisions recently. is really high still, right? When compare to different regions of their monetary policies or policy rates. So that gives Central Asia different choices when they come to different kind of projects or even companies, right? They have different choices. So bond insurance is quite essential or very practical, very useful financial instruments. I mean, for the upcoming several years. And for other things, for example, listing in major financial market is another wise choice for some of the eligible projects or companies, or even SOEs or governments, or multilateral development banks like EDB, right? So, for example, listing in Hong Kong, now we get access to global funds, very active market right now, and especially compared to the past like 4 years or after COVID, right? So we see the very clear trend right now, very dynamic market right now. So Hong Kong listing, as well as other like global financial institutions or markets listing, is another choice. So together with those bond and equity, these are traditional instruments. So another one we have already talked is many of the professionals already talking about it is Islamic financial instrument. I want to add one more point is that in China, actually it's quite new, right? So we see huge potential. But in Hong Kong, we are one of the pioneers to initiate or to improve the Islamic, for example, the Sukuk, right? And during the first half of this year, we already hold or participate several of the seminars or conferences like this to talk about like Hong Kong's special roles or in the future, right? How to like lead the global like Islamic different kind of financial regulations or products. So we are one of the pioneers really actively to do this. So I think Central Asia can play a bigger role to connect in Middle East, China, and global funds to pay more attention. So that's where I see huge potential. So if I ask a question, maybe not one simple answer, just 1 + 1, yeah, at the same time.
Abdullah, so you spoke about how like there's no one size fits all when it comes to regulation. But how can Central Asian countries make the region feel less like a collection of separate markets and more like an integral investment decision?
I suppose that to integrate into the the investment side, when it comes to the because I'm from in the context of the regulatory and supervisory framework, I suppose the introduction of the regulatory and supervisory framework, we should not develop as a parallel regulatory, because like in some jurisdiction you have a separate set of regulation, conventional and Islamic, but in this case, Islamic finance should be fully integrated into the existing conventional parameters, because with the adoption made, like with adaptation, where specificities into the existing framework, that would allow, faster integration of the Islamic finance into the existing framework. So that's why, like in most jurisdictions, when we advise as part of our policy recommendation, don't develop a framework separate. It could be like integrated, because at the end of the day, risk is a risk. There is no religion to the risk, So that is where, from the stability point of view, you should look at, like what are the risks inherent in any of the structure that you develop.
So what is usually the biggest deal breaker in Islamic infrastructure finance? Is it the Sharia structure, the legal framework, or the project's commercial bankability?
You put me on the spot.
So they can avoid it.
So I think neither, because now if you look at probably a mix of a combination of both, what commercial expectation would be out of a particular project. And from a legal regulatory perspective also, in the past we've had some challenges domiciling a particular transaction or a contract, whether a regime would be suitable to host the Sharia nominate contracts and the structures and provide adequate protection and risk mitigation to the counterparts. So, for example, if we are using a mudaraba structure, an equity-based structure to provide project finance, so are all stakeholders comfortable that the legal regulatory framework of that jurisdiction where that project is domiciled is adequately geared to protect, the interests of the parties? So, Alhamdulillah, I think we have seen significant improvements in this area, but I think there will always be time to maturity. In a sense, we've started recently. So how these, let's say, relationships play out and how these get evolved further, will I think, improve by the time. And we'll see more and more of this, specifically in this region, where the banking, the instruments are not as established as probably in the GCC or Southeast Asia or some other parts of the world where the industry has seen, a lot of transactions over the past 20, 30 years.
Thank you, Your Excellency. So for my final set of questions, which I will be asking the same to all of you. So if Central Asia wants to unlock more long-term investments over the next few years, what is the single most important step it should take? Your Excellency.
We have, as I mentioned, this is at least for the next 3 years, they would need around 260 billion. This is a very viable area, and we have commitment to supply as much as we can in capital. The case is clear, and it is worthwhile, it is obvious, and we have the production and the resources in this country is enormous. It's very attractive, but we have to draw to convince ourselves. Number one is to adjust the rules and regulation. This is number one. Two, as His Excellency mentioned, the capacity building, and we have agreed yesterday on a massive. We are facing a huge shortage in having the qualified people, but we are working on that, and we think that with the number of universities, you can do that. Once we acquire that, and we put the priority for the project, and the rules is very simple, that any project, we have to measure how much it will contribute in real terms to the GDP on sustainable basis. That is number one. The money we put there will push that. The only exception to that is the equity participation and the inclusion. We don't want that the people of the country see that everything is going and making the difference, and divide is getting bigger. They should be having the right, the opportunity, and to access to finance, and it has to be made very quick on a very, and with delayering it. We don't want to say bureaucracy, but delayering it, that they have a one-stop shop which open to everybody. Now, mind you, we all know that the underlying economy in this country is huge. Once you give that right, the internal funding will be going on J-curve, and it will be maybe to the surprise of many people. But that's what we have seen. And we have seen where, even in Africa, we work there in 40 countries, and we see that obvious.
Same question to you, Abdullah.
Okay. Islamic finance in Central Asia actually remains at an early stage of development. And from financial stability perspective, actually it remains limited risk from our perspective. But looking at the compound asset growth rate over the last 5 years, actually is the second growth region in the world, which is about 20%. So I think going forward, for the regulatory authorities or supervisors The challenge is actually to ensure that the Islamic finance evolves in accordance with the international standards, first. Second, supervisory capacity need to be developed, and also to ensure the financial stability remains as where we are now. So I think that is the three key messages that I think going forward, despite all this growth rate going forward.
Ammar.
I think if you look at the road to maturity of Islamic banking and finance in this part of the world. So financial ecosystem consists of multiple, let's say, stakeholders. One is the local population, and if you look at some of the statistics on banking and financial inclusion, you see disparity even in the Central Asian region, with Kazakhstan at a higher level and some other countries at a lower level. So what is that reason, or what is that specific concern why there is lack of financial inclusion in this part of the world? Is it because of Islamic finance or the lack of it? So one of the pillars is how is it catering to the local demand, the population, and how it contributes to the financial inclusion. This is the first thing that I think, because you have policymakers, you have development banks sitting here to look at. Second is integrating this with larger Sharia compliant market, global Sharia compliant market, inviting capital, and potentially having capacity to also integrate. We know there have been some let's say initiatives in this where you have the Abu Dhabi Stock Exchange and the Kazakhstan, they are connected now. So a lot of these things are happening, but then so the first part is the local, the local demand, the local integration, providing solutions to the retail, SMEs and corporates locally so that they feel integrated through Sharia compliant, non-interest based banking and financial system. Second is inviting, the capital outside. And this can only be achieved through what we've already spoken about, lastly to say the capacity, the regulation, the support, the ecosystem, as simple as the courts and the legal systems having the capacity to support these contracts. And so I think finally we see with the interest of institutions like EDB and other multilateral institutions that are in this endeavor, we very soon will see a glorious future for Sharia compliant banking and finance, non-interest based banking and finance, which we believe very passionately that is the way that humanity can prosper and succeed. We have seen the ills of how interest-based, funding, interest-based economies have hurt the global system. So we are very passionate in our belief as Sharia compliant banking and financing practitioners, and I can say this with confidence and presence of, the equity-based part financing, the Sharia compliant financing, which is non-interest based, inshallah is the future, not just for this region, for the world. Thank you very much.
Angela.
So I think huge potential here, actually, as mentioned, different kind of creative financial instrument needs to be needs many kind of different levels of cooperation, together to different parties of different regions, like to this panel. At the same time, for example, we have some of the uniqueness here in Central Asia, right? We have to emphasize it. For example, we have cash flow generators, these huge projects, which is quite popular and attractive for global investors. That's some of the selling point we can target our clients or these funds, right? So many of the things to explore and to discover. At the same time, as I mentioned, as today we talked a lot about Islamic financials. I think maybe in the whole region, Hong Kong can play a bigger role. That's what we're doing right now to link different shareholders together, right? We have to have some of the hubs, right? To link these hubs means that the whole range or the broader range of this type of financial instrument can develop really fast. At the same time, have to consider about sustainable mobility, like development, green finance, ESG requirement, all these things put together. So, for example, next year we will gather here to talk about what we have been doing for the past 1 year. I'm pretty sure that we will talk about many of the new kinds of corporations or products. That's what we're doing right now. So, evolving really fast, and a lot of efforts should be put here. That's really positive, right?
Thank you, Teze.
I think to secure more long-term capital, I would definitely recommend Chinese capital market, especially for like China bond market. Last month, Kazakhstan government Ministry of Finance just issued a panda bond, and which get really a good example for Kazakhstan company for future panda bond issuance. And also early this year, Kazakhstan sovereign wealth fund, SAMRO, also issued a panda bond, and CCX actually provide the credit rating for this case. And also we have engaged a lot of client for a Hong Kong market dim sum bond interest, which also can secure very long-term and relative cheap capitals. And actually last year, we have a KMG issued a dim sum bond in Hong Kong market. And also we have a Development Bank of Kazakhstan, DBK, came to Hong Kong market for issue the dim sum bond. And also, beside the bond, I think syndication from Chinese bank is also a good option. Actually, we have a lot of Chinese bank coming to the conference as well. And also, equity market also a kind of a source for Kazakhstan company to secure money. Yeah.
Thank you. Ruslan, so I want to give the floor to you for your closing remarks and ask you, what does Central Asia need today?
Yeah. Actually, as we mentioned, our analysts have conducted a special comprehensive study about what Central Asia will need by 2030. As I mentioned, $160 billion only in energy, $60 billion in transport infrastructure, $14 billion in water infrastructure and irrigation, and $7 billion in logistics. And this requires strong partnerships between all financial institutions. Speaking about Islamic finance in our country, in our region, is still at an early stage. But developing Islamic finance is not only about attracting capital. It is also about creating ecosystem, creating the Islamic financial market itself in the region. I think when the Islamic ecosystem develops, businesses gain access to financing, investors gain new opportunities, citizens benefits from larger inclusive economic growth. That's why we are engaging to advertise the Islamic window within our bank. Actually, last year, we adopted all regulatory documents to launch Islamic window within our bank. And last November, we signed our first Islamic product, Ijara product, leasing wagons to a railroad company. Not much money, but it's an indicator that we have experience, we showed our muscle, that we can provide Sharia compliant product. And we're looking for issuing sukuks in the future. So that's why today's discussions are very important. And as conclusion, ladies and gentlemen, as we conclude our session, let me once again thank our distinguished guests for joining us, for sharing their valuable perspectives. And today's discussion demonstrated the scale of investment opportunities. And not only that, I think it also demonstrated the region's growing economic ambitions. And one thought, one message came through very clearly, that achieving these ambitions will require innovation, investment, and strong partnerships. As the Regional Development Bank, EDB remains committed to supporting these partnerships. Central Asia is no longer simply a region of natural resources. It's a region of innovation, fast-growing, manufacturing, long-term investments. So let me once again thank our distinguished guest, His Excellency Sheikh Ibrahim Al Khalifa, Dr. Sami Ali Al Suwalein, Dr. Abdullah Harun, Amar Ahmad, brother Angela Cheng, and Tezevon, for your joining us, for participation, for your valuable contribution. And I would like to thank to our moderator, Paula Naufel, for her valuable expertly guiding our discussion. And thank you all for joining us. We look forward to continue now this dialogue and strengthening cooperation in the years ahead. Thank you very much.
Dear participants and guests, the session has concluded. Thank you for your participation. Уважаемые участники, сессия завершена. Благодарим спикеров и участников. Приглашаем всех на кофе-брейк. Dear participants and guests, you are invited to the coffee break.